Tesla's stock is in free fall, but here's what almost no one is talking about. Yes, sales are plummeting in key markets like China, Germany, and the US. Yes, insiders have dumped over $100 million in stock. And yes, even Wall Street analysts who were once bullish are slashing their Tesla price targets. But here's what's even worse. Morgan Stanley's latest investor survey just revealed that Tesla is losing its status as a high-growth company. For the first time, institutional investors aren't just questioning Tesla's short-term struggles, they're questioning its long-term dominance. And that's the part that no one is paying attention to right now. Because if Wall Street is right, it could mean that Tesla is entering a completely new phase as a stock. Now, what does that actually mean for the company's future? Could this sell-off be a buying opportunity, or are we looking at the start of a much bigger downtrend? We'll break all of that down in this video, but before we get into it, there's one key reason why Tesla's stock could be in even bigger trouble than most people realize, and we'll talk about that later in the video. Before we get into it, make sure to subscribe. This is a data-packed breakdown, and if you follow Tesla stock, you need to be ahead of these market shifts. Tesla's stock has collapsed over 30% in 2025, wiping out billions in market value. And the ones making the most money from this crash? Short sellers. Hedge funds betting against Tesla have already raked in $16.2 billion in profits this year alone. That's one of the most profitable short trades in the market right now, which tells you exactly what Wall Street thinks. There's still more downside ahead. And this isn't just some minor dip in an otherwise strong uptrend. Analysts who were previously bullish on Tesla are now cutting their price targets, and Mizuho just slashed its target by 16.5%. Their reasoning is clear. Tesla's sales numbers are worse than expected, competition from Chinese EV makers is accelerating, and investors are losing confidence in Tesla's AI and self-driving narrative. Even Elon Musk himself isn't immune to the stock's decline. His net worth plunged by $29 billion in a single day, one of the biggest single-day losses for any billionaire this year. This kind of sell-off doesn't happen just because of market fluctuations. It happens when investor confidence collapses. But here's the thing. The stock price drop is just a symptom. The real issue? Tesla's actual sales numbers. And that's where things get even more concerning. Because when you actually look at the numbers coming out of China, Germany, and the US, it's clear that Tesla isn't just dealing with a temporary dip. It's losing market share in key regions, and if it can't turn that around fast, this stock could have a lot further to fall. And this is where the Morgan Stanley Investor Survey comes into play. Because for the first time, institutional investors are signaling that Tesla isn't just struggling in the short term, it's losing its status as a high-growth company. For years, Tesla was the undisputed EV leader, but now the numbers are making it clear. Tesla is losing its grip on key markets, and nowhere is that more obvious than China. At first glance, it might seem like Tesla's confident in its pricing power. They recently raised the price of the Model Y long range in China by RMB 10,080, bringing it to RMB 313,500. But here's the problem. This price increase is not a sign of strong demand. In fact, Tesla had already lowered prices in January, and the company is now quietly rolling out aggressive financing incentives to soften the impact. Tesla is now offering 0% interest 3-year loans and low-rate 5-year loans, which means they're trying to offset the price hike with easier financing. This tells us one thing: Tesla is still struggling to maintain demand even after the initial price cuts. And the real concern? Tesla's market share in China's EV sector has dropped from 12% to 10%, even though overall EV sales in China are growing. That means Tesla isn't just losing customers, it's falling behind while the market expands. And who's taking those customers? BYD. BYD isn't just growing, it's dominating. They've already overtaken Tesla as the world's largest EV maker in terms of volume, and their cheaper, feature-packed EVs are crushing Tesla in the mid-tier price range. That's exactly why Tesla is now rushing to develop a lower-cost version of the Model Y to compete. Tesla's teams in Shanghai are working on a stripped-down Model Y, aiming to cut production costs by 20 to 30%. The goal? Launch a cheaper, simplified Model Y in China first, with a possible rollout in the US and Europe later. And China isn't the only problem. In Germany, Tesla's sales collapsed by 76% in February alone. That's not a typo, 76%. And it's not just because of competition. The real reason? Tesla lost a key German EV subsidy. Without those government incentives, Tesla's cars suddenly became much more expensive, while local brands like Volkswagen, BMW, and Mercedes still had the advantage of home market trust. Even in the US, where Tesla has dominated for years, sales are now down 2%. That might sound like a small dip, but it's actually a huge warning sign because the overall EV market is still growing. That means Tesla isn't just dealing with a slow market, it's actively losing market share to competitors like Ford, Rivian, and GM. So, with all of this happening at the same time, it's no surprise that Wall Street is starting to lose confidence in Tesla's future. And that brings us to Morgan Stanley's latest investor survey, which just revealed the biggest red flag yet. Wall Street is starting to turn against Tesla, and the Morgan Stanley investor survey just confirmed why. For years, Tesla was treated like a tech stock, not just an automaker. That's what gave it a premium valuation, letting it trade at multiples far higher than traditional car companies like Ford or GM. But now, institutional investors are changing how they see Tesla, and the numbers in this survey are brutal. According to Morgan Stanley's latest report, 85% of investors now believe that Elon Musk's political involvement is actively hurting Tesla's brand. That's a massive shift. For years, Musk's persona helped build Tesla into one of the most valuable companies in the world. But now it seems like his controversies are starting to do real damage. And it gets worse. 59% of investors now expect Tesla's deliveries to decline in 2025. This is the first time sentiment has flipped this drastically, and it signals something deeper. Investors are no longer confident in Tesla's growth story. This is the part that almost no one is talking about. Tesla has always been seen as a high-growth company, which is why it could trade at insanely high valuations compared to traditional automakers. But now, Wall Street is starting to see it as just another car company, and if that shift continues, Tesla's stock price could fall a lot further than people expect. And that brings us to one of the biggest warning signs yet. Tesla's own executives are dumping their shares. Over $100 million in Tesla stock has been sold by insiders in just the past few weeks. Normally, when executives believe in their company's future, they buy the stock during dips, but instead, they're cashing out. So what does that tell us? It suggests that even Tesla's own leadership doesn't see a quick turnaround ahead. And Elon Musk? Instead of reassuring investors, he's fueling the uncertainty. His political statements, public feuds, and erratic decision-making are driving away institutional investors who just want to see Tesla focus on business and execution. At this point, Tesla isn't just facing stock price pressure and declining sales, it's also battling a complete shift in how Wall Street values the company. So the big question is, can Tesla recover from this, or is this the start of something much bigger? Tesla is at a critical turning point. Some analysts believe this is just a temporary downturn, while others think it's the start of a long-term decline. There are still some big believers in Tesla's future. The bullish argument is that Tesla isn't just an EV company, it's an AI and robotics company. If they can successfully scale self-driving technology, energy solutions, and AI-driven automation, Tesla could still justify its premium valuation. That's why some analysts still believe in the long-term upside. They see Tesla as more than just a car maker. But here's the problem. Investors don't trade on potential alone. Tesla needs to prove that it can maintain its dominance in the EV space, and right now it's losing ground fast. So what needs to happen for Tesla to recover? First, it needs to fix its demand problem. Tesla has been adjusting prices constantly, but the real issue is competition. In China, BYD is expanding rapidly with cheaper, high-tech EVs, and in Germany, Tesla is struggling after losing key government incentives. If Tesla wants to stay ahead, it needs a better strategy than just cutting and raising prices. Second, Tesla has to win back institutional investors. The Morgan Stanley survey showed that investors are losing confidence in Tesla's long-term growth. Musk's distractions and public controversies are only making that worse. If Tesla wants to be treated like a tech company again, it needs to show serious execution in AI, self-driving, and energy without the constant distractions. And finally, Tesla has to stabilize its margins. Right now, they're caught between cutting prices to boost demand and trying to protect profitability. The new lower-cost Model Y being developed in China could help, but only if it launches fast enough to compete with the flood of cheaper EVs entering the market. So what's the realistic stock outlook? In the best-case scenario, Tesla turns things around, scales its AI ambitions, and regains lost market share. If that happens, the stock could stabilize and even rebound. In the worst-case scenario, Tesla keeps losing EV market share. Musk's controversies push more investors away, and the company is forced into a race-to-the-bottom price war. If that happens, Tesla's stock could still have a lot more room to fall. And here's the thing. This isn't just about Tesla's stock price today. The way Wall Street is reevaluating Tesla right now could change how the company is valued for years to come. What do you think? Is this just a temporary dip, or are we witnessing the beginning of a long-term Tesla decline? Drop your thoughts in the comments. Make sure to subscribe for more in-depth Tesla stock breakdowns. We'll be tracking all the latest moves from Wall Street, Elon Musk, and the EV market.